So this is an example of a scenario where I kind of got caught, and like these EMAs do not work perfectly. Obviously, there's nothing in the market that's going to tell you precisely when to buy and when to sell and be profitable 100% of the time. This is an example where I think I just got caught too early and didn't really use the right risk management in my trade. So if you look at the middle of the day there, we kind of got caught in a little range bound action for most of the middle of the day from like 12 to
Yeah, right
1.
through here.
Right. And I think it was on that second dip that I decided to buy. We had crossed over the 8 and 21 EMAs on the way up. And you don't have VWAP up on your chart, but that's also about where VWAP was on the day, in that like 12 to 1 o'clock area. And so what I was essentially playing was a curl off of VWAP to test high day up at like 44.31 there. And yeah,
No,
it's the
that's
next day,
Tuesday.
I think.
There we go.
Yeah, 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 perfect. And so like exactly. So like that second tap down, I guess, in the middle of the day between that 12 to 1, we come
Right
up.
here.
Yeah, literally that one right there. We had kind of bounced, we held the prior low. And so I got into same day calls right around like the 4:30 break. And we got a little bit of upward movement. And then we came back and actually retested the lows at like 4:29, which is where I got stopped out. And then I think the very next 5 minute candle there, we started that massive uptrend, that massive rally into the end of the day, ran like 4 points, and my calls were up like, I don't know, like 400%, the ones that I had sold early. And those, I actually sold those for a loss, right? And so what I'm talking about in terms of how I messed up the trade was looking at the EMAs. We had actually, like I said, broken out of the EMAs, and it looked like we were going to continue to head higher. And I think I just added too high on the trade from where the risk was. You can see that we kind of hold that 429.5 level, looks like, in the middle of the day. And that's where I should have had my risk, as opposed to like up at 4:30 by VWAP. And so once I crossed VWAP, I honored my 20% stop loss and got out, and then it wound up rallying much further. So a couple of ways that I could have, I guess, made a better trade was, one, use that risk off of like exactly where you are right now, like that 429 area. If that's your previous low, we're gonna have to break that to start a reversal and retest the low of the day. So that should have been my risk point, as opposed to like 429.5, 430 range, which is what I was using. And then secondly, I probably, and this is just one thing that happens. One of the downsides to trading same day expiration options. Like we like those options because they give us the volatility that we want, and we can get those 100, 200% returns. But at the same time, if you're a little bit early on a trade, um, it can wind up hurting you. Obviously, the trade's going against you, so like it can wind up hurting you, but you can get stopped out just for being early as opposed to being wrong. So my view on the day was actually correct. We did wind up holding that level, retesting the high day, and then exploding through that. My analysis, my thesis was correct, but I was wrong in the trade because I didn't execute it properly, and that's just one of the risks that can happen. Um, Trading zero DT options. So just keep that in mind. Your entry is everything, especially the closer you are to expiration on your contracts. And so just keep that in mind when you're trading zero DT contracts.
Yeah, I would absolutely emphasize that. I mean, um, with them being so close to expiration, the time decay on them, if, like you said, even if you're correct but early, you get stopped out and then watch the position you were in like do what you expected, which is it's killer, but it's boom or bust. That's how they are, and that's why we love them. So we'll take that every time. But
Exactly.
I got killed here too, and I know a lot of other traders did. I mean, a day like this is just so tough when we had the volume, but you're just completely range bound here. And we were getting movements, but nothing was sustaining, as you can see. Like we completely extend from the ADMA. This looked super bullish at open, and then you just completely break through all of them in four straight candles, and then we go back up. Like this sideways trading junk is just an absolute killer for traders, at least for buyers, not sellers. So um, I got killed here. But as I was saying earlier, this is like as you can see how consolidated these EMAs are. Like this is where I was getting killed, and I mean this is what makes you get better. You have to look back and learn from your mistakes. But I should not have been trying to enter positions when all our EMAs were so consolidated here. You want to wait to see separation and confirmation. And as you can see, like these were consolidated for a couple hours to the midday, but had you waited, you get clear confirmation. Even if you entered a little bit later, like up in where my mouse is here, you do end up getting clear confirmation. The 8 breaks over the 21. It never really fell under the 50 on the day, which would have been your one of the things telling you like this is pretty much staying bullish. The 8 never crossed over the 50 on the whole day. It just bounced back and forth between the 21.